As central banks worldwide increase interest rates as a means to address rising inflation, there's a rising concern that the global economy could be on the verge of a recession in 2024. This potential downturn could precipitate a cascade of financial crises in emerging markets and developing nations, resulting in long-term repercussions. The pace of global economic expansion is slowing down considerably, raising the likelihood of additional countries slipping into recession. Experts from all corners of the globe are expressing grave concerns regarding the potential continuity of these patterns, which could have grave ramifications for the populations residing in these economies. So, in this video, we'll take you through the state of the economy of some major countries to see how they're doing amid this global slowdown. Let's start with the UK and Japan, two super important economies. According to figures released recently, the economies of the United Kingdom and Japan both witnessed 2 consecutive quarters of economic contraction, fitting the precise definition of a recession. Officials in Europe, in the meantime, stated they anticipate slower economic development throughout the continent. Now, you must be wondering why this matters. Well, here's a disappointing fact. The world economy may be in more instability this year than before as countries attempt to recover from slower than expected downturns. These slowdowns, combined with impacts along with one in China, may have unanticipated repercussions throughout the rest of the globe. As of right now, the shock of global inflation is hurting Europe and the UK, and decades-high interest rates in reaction have restricted demand, following a 0.1% decline from July to September 2023. The UK's GDP shrank by 0.3% in the last quarter of 2023. Even if it's a little tiny recession, it illustrates the potential for ongoing economic contraction and high prices. European officials have revised their growth forecast for the Eurozone economy for this year down from 1.2% in the autumn to just 0.8%. The European Commission stated in its projection that the EU economy has entered 2024 on a weaker footing than expected, following subdued growth last year. So forecasts aren't that good for the UK and Europe. What about Japan? Japan's GDP unexpectedly contracted 3.3% in the first quarter of 2024, then declined by an annualized 0.4% in the last quarter of 2023. The previous quarter's consumption fell at the same time. After years of being trapped in a deflationary cycle, Japan is now experiencing a welcome upswing in inflation. Therefore, earnings are not keeping them up with price increases, which is preventing consumers from spending as much. Now, if the UK and Japan are being hit by a recession, we should be talking about other countries in Europe. Finland's GDP shrank by 0.5% on an annual basis during the entire year of 2023. However, experts believe that the state of the economy will hopefully get better soon in 2024. This would be the result of reduced interest rates and increased purchasing power. Also, Luxembourg officially entered a recession by the end of 2023. Actually, important industries like trade, finance and construction have seen a decline in activity recently. Growth in both public and private consumption, additional support measures are likely to strengthen domestic demand. But a slowdown in the labour market is expected to cause precautionary savings and a modest drop in the growth of private consumption. This is similar to the case of Denmark. In fact, Denmark's economy is officially in a recession as a result of the country's GDP contracting for 2 consecutive quarters in 2023. This is in spite of the fact that the previous month's inflation was virtually non-existent. The same goes for Ireland. Technically, the Irish economy is still in a recession. When comparing the last quarter of 2023 to the preceding 3 months, the GDP decreased by 0.7%. There is an elephant in the room when talking about recession. China can't be ignored. It's the world's second largest economy. But before we go into it, if you like the video so far, please consider liking and subscribing to our channel. The world is concerned about China's economy since it was expected to contribute 1/3 of the growth in the global GDP this year, but its sharp decline in recent months has raised concerns. China's economy is in difficulties, even if it isn't officially in a recession yet. As China's imports of all things from electronics to building materials decline, leaders are preparing for a blow to their economies. China's need for construction site equipment is greater than previously believed. The economic issues are a ticking time bomb, according to US President Joe Biden. The real estate industry there, which accounts for a disproportionate amount of GDP, is in trouble. In addition to building an excessive number of houses, Chinese consumers are now also burdened with significant mortgage debt, which they first took out with the expectation that the real estate market will continue to expand. Over $10 billion has already been removed from China's stock exchanges by foreign investors, the majority of whom sold blue chips. Both Morgan Stanley and Goldman Sachs Group Incorporated have lowered their targets for Chinese stocks, with the former citing potential negative ripple effects on the rest of the region. Talking about ripple effects, how do you think trade deficits in China impact other countries? The economies of Asia and Africa are currently suffering the most from trade deficits. China reduced its imports of autos and electronics, causing Japan to report its first export decline in almost 2 years in July. Last week, central bankers from Thailand and South Korea downgraded their growth projections due to China's sluggish recovery. However, not everything is doom and gloom. Global oil prices will decline as a result of China's downturn, and the country's deflation is lowering the cost of commodities sold outside. That helps countries like the United States and the United Kingdom that are currently struggling with high inflation. Certain developing nations such as India see possibilities and aspire to draw in the foreign capital that might be departing from China. However, a protracted slowdown in China will harm rather than assist the rest of the globe, given that it is the second largest economy in the entire world. In an interview with Bloomberg TV, Peter Berezin, chief global strategist of BCA Research Incorporated, stated that China's deflation isn't such a bad thing for the world economy. However, it would be problematic not only for China, but for the entire global economy if China continues to weaken and the rest of the planet, including the United States and Europe, enters a recession. Now let's talk about the world's first largest economy, the United States. The country's economy grew by far more than predicted in the last 2 quarters, primarily as a result of the strong consumer spending. The $5 trillion in economic stimulus money has given the US economy a competitive advantage over most other developed nations and is still supporting household budgets. Its reduced reliance on Russian energy also helps. As a result, it is less susceptible than many other nations to the spike in natural gas prices that coincided with the invasion of Ukraine in February 2022. However, recent US retail sales figures for the month of January showed significantly lower than anticipated levels, indicating that following a record holiday season, Americans may be tightening their belts a bit more. Nevertheless, the country's unemployment rate, which has been below 4% for 24 months running, shows how robust the labor market still is. So it seems there are many unanswered concerns regarding the US economy, including when and if a recession will occur and how bad it would be. However, those concerns are already being addressed in other parts of the planet. Who is experiencing a recession now, and what does it possibly imply for the US? Let me tell you something. The US wants other nations to avoid going into recession. That makes it quite simple for the US to sell the items that they're best at creating across the globe. However, not everyone is well in the world. To begin with, New Zealand has entered a recession, but is this really a major problem for the US? According to experts, that likely won't have a significant effect in the US. In contrast to several other developed economies, the economy of New Zealand is little. However, some of the causes behind the recession in New Zealand are well known, including inflation and attempts by the central bank to combat it by hiking interest rates. This is exactly similar to what happened in Germany. Germany's recession has also been exacerbated by inflation, and whether in Germany or New Zealand, private consumption has always been negatively affected by high energy and food prices. To sum up, now that the globe is witnessing a harsh economic slowdown, policymakers should be doing something. Actually, they could change their emphasis from decreasing consumption to increasing production in order to achieve low inflation rates, current stability, and quicker development. In order to promote growth and reduce poverty, policy should aim to increase capital allocation, productivity, and other factors. All the conditions are still in place for economic instability to persist on a global scale. It is imperative for organizations to be ready for a variety of economic and geopolitical situations, as uncertainty is unlikely to ease anytime soon. Thanks for watching till the end. If you've enjoyed this video, make sure to hit that like and subscribe button to receive more content. See you in the next video.